So, what are we going to talk about today? Not unsurprisingly, we'll always have a chat about the elements that make up Monday Market Matters as we go into the opening of the session. But really, we're going to talk about, as I said, highs and lows, all right? Highs of the day, lows of the day, highs of the week, the month, the year, etc. In particular, why are they useful? We'll talk about how are they created? And more importantly, how do we make best use of them? And how could we combine them with some price action trading elements in order to build a simple trade action plan? And with that, what we'll do is we'll switch across to the live markets as we get towards, sort of the end of our session. So be sure to end. And what we'll do is we'll have a little look at how the subject matter we're talking about today, how it reflects in live markets. Before that, ladies and gentlemen, a little bit of housekeeping. So for those of you in the UK, and probably specifically those of you in London, we will find that ActivTrades are sponsoring the IX Investor and Trader Show in this London, Friday, 24th November at the Grand Connaught Rooms, in central London. Be absolutely fabulous for you to come along and join us there. What you'll see is at the bottom there is a code that will get you a free ticket. You'll be able to save a few pennies there. ATPW23 is the code that will invariably give you a free ticket. I'm going to be speaking there at I think about 2 o'clock there, talking about how to use monthly charts to your advantage, which we've talked about here before. But also there will be some of my ActivTrades colleagues will be here that you'll be able to chat to them. You'll also find there's an ActivTrades stand there. By all means, come along, come and join us. Come up and have a chat. We'll be very interested to have a chat with you and discuss your trading experiences. So for those of you who are said in London, I look forward to meeting you on Friday. We look forward to what will be a fabulous day. So for those of you who don't know me, my name's Paul. I've traded for many years, traded for funds, traded for clients. Primarily, I focus on trading FX indices and commodities. And primarily, I'm normally a trend trader for my longer term trading. And I tend to be a mean reversion or a reversal trader for intraday. And that in particular will be relevant to what we're going to talk about today and about how to use highs and lows and turn them into a trading opportunity for you. I appreciate that we always have new people joining us. For those of you joining Monday Market Matters for the first time, it's our regular webinar series, start of the week in the right frame as we prepare for the opening of the US markets in about 20 minutes time. So every Monday, 2 o'clock London time, what we do is we look a little bit at the news coming out this week. We focus an awful lot on education, a piece on building your trading knowledge. Then we'll have always have a chat about the sort of the platforms and the tools that you have available to you as an ActivTrades client, and always finish off with a little look at the live markets as we start the week in the US session. So there's always plenty for us to cover, always plenty for us to discuss and talk about. So let's crack on with having a look at the news. I say it every week, and I make no apology. If you're a new trader, I don't expect you to be able to effectively analyze the news, but it is important that you know when the news is coming out. You will find that you can find that out on an economic calendar. There is an economic calendar on the ActivTrades website that I suggest you utilize. There are other ones elsewhere, but you'll find that one is there, and it gives you an indication of what formal economic news is coming out for this week ahead. And we've got quite a bit coming out. There's a fair bit coming out for the Australians. So if you're a Comdol trader, that will be relevant. Yes, we did have monthly producer prices from Germany earlier today, which were a little bit less than expected. But I think what most people are going to be interested in is that the Royal Bank of Australia releases its monetary policy minutes tomorrow. Canada also has its CPI data released tomorrow, along with US existing home sales. CPI data has provided trading opportunities, and so you'll find lots of traders focused on that. On Wednesday, what we have is the Federal Reserve is releasing its monetary policy minutes. You will also get some other US data, and you will also get the services and composite PMIs, the flash ones for Australia. And we see an awful lot of that sort of Thursday and Friday. We see an awful lot of the flash manufacturing and services PMIs that are due for, as you can see there, France, Germany, the overall Eurozone, the UK, and we also see them for Japan and the US on Friday. So that data is always useful to give traders just an overall snapshot of those individual countries' manufacturing and service elements of their economy, and actually how healthy or not, as the case may be. And so of course, that has an impact there into terms of understanding, the sort of likely trajectory for those economies, and therefore also those nations' currency. So traders will take a view on those, okay, and be interested in them, and undoubtedly we'll be able to talk a little bit about them on Friday. As I said, for those of you who might see us in London at the IX Trader Show. We've had a little look at the news, so let's talk about our main piece for today, right? Our main education element for today, which is all about trading using the highs and lows. Before I start, it would be interesting to know, of those of you joining us here for the live session today, how many of you actively use the highs and lows within their own trading presently? Maybe it's a part of your trade setup. Maybe you're completely new to trading and are not aware and are here for the first time, and that's absolutely fine. That's what these sessions are here for, to help you. But actually, how many of you use the highs and lows? So Brendan, so he says yes, he does. Okay, and it's interesting to know, A, if people are aware of them. B, do people use them? And C, how do people use them? So I'm going to sort of share a couple of insights myself in terms of what I'm interested in seeing and what I utilize in my own intraday trading. But as the slide says, lots of people who are new to trading, they are interested in analyzing market setups to understand if there are simple, repeatable patterns and concepts that can provide them with a solid trading opportunity. One of the kind of repeatable patterns is the use of highs and lows within markets. And it might well be seen as previous day's highs and lows, or the previous week, or the previous month, or the previous quarter, or the previous year. I'm sure some people could even use the previous decade, but that's perhaps a little bit beyond certainly my remit and my view in terms of looking at it. And if anything, what I particularly like to see is in my intraday trading, how I can utilize the previous day's highs and lows, and also the previous week's highs and lows, and how I can utilize that as how the market reacts at those particular levels, and look for simple, repeatable patterns and concepts that can provide me with a trading opportunity. To help me understand that, and to help you understand that, what I might do is just talk a little bit about understand the overall market players and why they are interested in the highs and lows of markets. And what we're going to have to do as part of that is we're going to have to sort of change the way we think, okay? And start going to move away from thinking purely just like a intraday trader. And it's time for us to start thinking, as a dealer, or as maybe what some people would call market makers these days. And we'll have a little look at that now. So it is a fascinating subject, and I believe it is a very simple, repeatable pattern and concept that can provide trading opportunity, how markets react at these levels, hence why that's what we'll talk about today. And as I said, I'll share some of my own experience, and then what we'll do is we'll switch across to the live charts and see how that's played out, particularly this morning. So as I said, I'm going to focus mostly on intraday and also on FX markets, because that's where my specific skill set lies. That's where most of my intraday trading, most of my hedge fund trading, etc., is focused on that. And I'm going to give you just a little bit of a basic insight. Okay, I appreciate we have a great range of experience of people here who join us for our sessions, from complete beginners to very advanced traders, and hopefully there'll be a little something here that can basically everybody can understand and utilize in their own trading. So as a general rule, I look at us there being four major types of market participants in certainly in FX markets, and you'd probably say for other markets as well. First one are the dealers, the market makers. Okay, these are invariably the sort of large institutions that have gained certain advantage in terms of the insight they get into markets, and on the flip side of that, as part of being the market maker, they generally have to be the dealers. They have to be the market makers that invariably effectively offset, manage orders, and basically are undertake the sort of the good running of markets on a day-to-day basis. What you will also find is that the next kind of level of player is that there are the corporate accounts. So corporate accounts, who could that be? But sometimes people forget that the FX market is actually there to oil the wheels of international trade. All right, we are operating as Group 3, the speculators, but actually the vast majority of business done in the FX market is, as I said, is actually by businesses undergoing, doing their international trade. So let's say someone like Ford Motor Company, okay, they have factories. They're an American company. They have factories in the UK. They have factories in Europe. They have factories in Turkey. So if you think about that, they have an awful lot of FX risk. So they've got, the American office operates in dollars, the UK operates in sterling, European ones will operate in euros, the Turkish one will operate in Turkish lira or something else maybe these days. But what it has is it provides an awful lot of FX risk, and invariably those the Treasury departments, those companies, they need to manage that and manage that well. And so they are operating in and out of markets to basically just to, as I said, just to oil the wheels of effective and efficient business and to keep international trade going. Then there's the third group who are the speculators. So, on one end there are, there's a kind of, looking at some of the institutions, particularly in kind of some of the sort of hedge funds, and then at the other end, of course, there is ourselves, the kind of private traders who are all speculating, who are operating markets to invariably to look for return and profit. And then, of course, you have, the sort of, let's say, the kind of the granddaddies, so to speak, operating FX markets, namely the central banks, all right? And the central banks are the ones who will set the tone and the narrative and the trajectory within FX markets based upon their own individual nation or zones requirements, but also operating together in order to just effectively maintain sort of equilibrium and sort of the good-natured moving of markets, okay, without having too many sort of issues or challenges. And whether central banks do that well is an interesting conversation and one for another time and day. But ultimately today, if you are completely new to trading FX markets, I just want you to have a little bit of a very, very basic understanding of these kind of four major types of market participants. And what we're going to look at is, well, we're going to look at, what the dealers, what the market makers are looking at, because that starts to filter into why we're interested in highs and lows in markets. So if you look at how dealers, and it's probably a sign of my vintage that what people would call dealers, invariably everybody knows as market makers these days. But if you look at what the motto of a market maker was, is that they invariably would understand two very simple elements, namely that market moves are rarely one way, and dealers understand that the majority of the time intraday markets are range bound around about 80% of the time. So if you're thinking about that, that's about 4 days out of 5 on a week. Now, it doesn't always work as cleanly as that, but as a general rule of thumb, it's important to recognize that most of the time intraday markets are range bound, and that little bit of nugget of information you should take away and put into your own sort of trading knowledge. What they would also know is that they know that to never trust the first price, because after a major news release, dealers would know that very often the first price print is the knee-jerk reaction of the market, and it can often be wrong. Not all the time, not 100%, but more often than not, it can be very often wrong. And even by just understanding these two elements, that can that dealers know and work with, well, that can actually help us as private traders as we view markets and what we look for in terms of A, understanding how markets operate, and B, looking for repeatable patterns, repeatable concepts that we can understand, that we can see manifest themselves on the charts in front of us, and most importantly, look at ways we can turn that into a trading plan that we can action ourselves. Then if we take it to another level, what we can do is, well, if what we can learn about, what dealers are doing and how they're operating is that the dealers, the market makers, they are generally always fading a move. All right. They're always fading a move. They're taking the other side of it. So, if you want to think like a dealer, then ABF should be at the forefront of your mind. Okay. Always be fading. Always understand that they are always doing that because they know that most of the time markets are range bound, and they know that most of the time, okay, certainly after news, the first move is the wrong move. It's a knee jerk move. Not every time, but a lot of times, okay. And as you grow in your trading experience, and as you look at how markets play out and manifest themselves, well, then you're in a position to start to take that information and work out how that actually looks on a chart in front of you. And that's what we're gonna talk about now, and in terms of how do I turn that into a trading idea that I can actually use. So, what we've learned over those couple of slides and over my own many years of experience is that market makers, the big dealers, they only make money when orders are triggered. Okay, they only get paid when orders are triggered. So they are always interested in bullying price towards where the biggest numbers of orders are actually sitting. And in previous sessions, okay, we have talked about, okay, where a lot of those orders are sat. But what we're going to sort of focus on here is that thinking like a dealer, okay, thinking like a market maker means that we have to sort of change our way of operating, okay? So as I show myself in my own bio, for my longer term swing trading, we are trend followers. I want to basically surf the biggest wave is the nicest analogy that I can think of to work at that, okay, in terms of I'm looking to sort of just be a trend follower. But intraday trading, this is where I tend to focus on mean reversion and reversal setups because I'm utilizing that information that 80% of time, all right, markets are range bound on an intraday basis, and that very often, the first move is the wrong move, and so dealers and market makers will always be fading into that move. As as private traders, we're looking to buy strength and sell weakness. Institutions, dealers, market makers, they are looking to sell into strength and buy into a weakness because, of course, they are operating at a very, very different scale and size than ourselves. So when we take on board that data, well, we start to look at, well, okay, that's all great, that's fair enough, but actually, how do I utilize that? What relevance does that have to us? But what we see is that when we're looking at markets, especially intraday markets, is that markets are still traded by humans. Okay, we have had a huge increase over the last 15 years, maybe even longer, in terms of the use of algos. Okay, in terms of markets, but even algos have been programmed by humans. They've been programmed by individuals. They are still a reflection of humans biases. Okay, and ultimately, what happens is humans, we look at charts, okay, we look at levels, we look at prices for usual place to do their business, all right, to do their business, to be a buyer, to be a seller. So things like big round numbers. So BRN, you'll hear me talk about big round numbers. So things like, on gold, $2,000, all right, big treble zero. Gold has been banging around $2,000. Okay, that becomes, really big, important number. DAX at 15,000. All right, big round numbers. They are levels and areas that are sort of, let's say, attract attention. But also what you find are previous highs and lows. Previous highs and lows, they are tradable opportunities, whether they be previous days high and lows, previous weeks high and lows, as I said, previous months, previous years. They can be all tradable opportunities. And what we're going to focus on is we're looking at them on an intraday basis. How can they help us on an intraday basis? So those previous highs and lows are tradable. Why is it? Well, because very often there are usually a lot of stops that are hidden there. If there are lots of stops that are hidden there, whether it be either buyers or sellers, if there's lots of stops in there, they do become an attractive area for the dealers, for market makers. Remember what I kind of said a little bit earlier. is that dealers, the market makers, they only get paid when trades get triggered. So they always want to push price to where the most orders are sat. What happens is once they're in there and dipped into it, this is what offers opportunity for a mean reversion trade, okay, where price is pushed out beyond its limits on an intraday basis, and invariably we get a reversal trade set up, and that allows us to sort of trade our way back into the range. And it'll be easier to sort of show you that on a couple of charts. We'll have I think there's a couple of examples in here, but then we'll switch across to the live charts to be able to look at it and put it into the frame of what we're actually seeing on the live markets in front of us. So just a random example here. Let me just bring up the bring a pen here and the tool and stuff. That this is a bit of a chart from euro dollar. Okay, and what we can see is this a 15-minute chart, which means these period separators, they are each day. Okay, each day. And what we want to see, if you haven't really looked at this phenomenon before, is just recognize and understanding how, on this particular day, this was the high of the day. And the next day, well, what actually happens is, when price makes a breakout in the morning, it's where it heads to. And actually, once it breaks through it, it flips it from being resistance, it becomes support before price rallies its way up. And it's actually over the night session, we come into the Asian session. And where do we go? Well, actually, what happens is we go down to what was the low of the previous day, and it's actually when price is here that as remember what I was saying, there'll be lots of stop orders here, and we see what happens is price basically reverses here. Okay, price reverses, and it works its particular way up there. Then the next day, when the first kind of move to the previous day's high is actually price is rejected. It's actually rejected a couple of times before it basically breaks its way out. But even when it breaks its way out, what happens is it puts in a reversal trade setup before it comes back in to that range. Because remember, 80% of the time, markets are range bound. And even if we look at where we basically see here, whether for this particular example, this is where the price enters the day, and yes, there's a huge big move up. But actually, where we look at where it exits the day, it's not that different. Okay, it's not that different from where it enters the day. And this is what we're interested in. We might be entering the day here, but we're exiting the day there. Okay, and even though we've had big moves throughout the day, it isn't actually a huge big difference from where we exit the day. Okay, and this is why what might look like a dull doji on a daily chart, okay, can actually give you an indication as you look down lower into the intraday charts, and actually what might have occurred and what might have gone on, or what particular levels were significant, or what particular levels may have offered you an opportunity, which we'll look at a little bit more in a few slides' time. So when it comes to looking at intraday charts, okay, how do we actually utilize this information? Well, what we want to be able to do is, as always, you want to know what, if any, major news is being released, okay? And we said that a little bit earlier, okay? It's always important to know what is major news being released for that particular session, because, that is likely to induce volatility into the market. You don't want to be caught on the wrong side of that. But what you also have to do is, start to look for the previous day's highs and lows. Now, you will see on my charts that I have an indicator that's plugged in that that is available. You'll be able to find lots of simple and variably free indicators for most of in fact, all of the platforms that are offered to you as ActivTrade clients, sort of whether it be TradingView, ActivTrader, MT5, MT4, etc. You'll find there are indicators there that you can plug in that will actually look at your previous days and previous weeks' highs and lows. And also you want to just be aware of any significant big round numbers that might be coming into play during that particular session. Because what happens is when price reaches those areas, if it reaches that area during the intraday session, well, then my natural inclination is to look for a mean reversion setup. So that could be things like a pin bar rejection candle, or an engulfing candle, or a key reversal candle. All those things which you will find we have covered before and are in the ActivTrades webinar archive. So go onto the website, find those webinars, and you'll be able to find them there. and also something like double tops and bottoms, right? Which is what we'll have a little look at today. Focus on some variations of double tops and bottoms. But as I said, what you will also find is that any good reversal setup, pin bars, engulfing candles, key reversals, star formations, anything that you might have a particular setup you like, well, this is where we want to look to have that confluence of events of price having pushed out to what might be a previous day or a previous week's high or low, and then also printed that kind of rejection, that reversal candle, because that is what we are particularly looking for. So we'll just talk very briefly about double tops and bottoms. They are very well known, very well regarded, and ubiquitous trading pattern. And you can find lots of great detail all over the internet about specific styles of trading double tops and bottoms. My general rule is that I like to see them on shorter term intraday markets, and as I said, I like to have it as a confluence of events, namely seeing a double top or a bottom at something like a previous day's high or low or a previous week's high low. That for me is a simple but effective trading setup. So when I talk about double tops and bottoms, and when I talk about why does that trade work, I sort of tell people that what you want to do is to think of it like you are looking down from above on a rugby scrum. Now, I do appreciate that we have a truly international audience who join us, and many of you will know what rugby is, rugby scrum, but I also appreciate that some people will not, and that some people may not understand rugby. So you can have you see the photo there on the side, that's like looking down from above on a rugby scrum where the two teams basically go head to head and basically battle for control of the ball, which is what provides them with the opportunity to score. When I look at that on a chart, well, I look at that as basically the bulls and the bears. Okay, the buyers and the sellers. They are like a rugby teams. Okay, in a scrum, and it's actually the rugby ball is price, and what they're looking to do is to wrestle control from the opposition. So that, not surprisingly, the bulls are trying to wrestle control from the bears and vice versa. And a bit like rugby, at some point, one of the teams is likely to tire or have it infringe, and the ball is likely to get pinged out. Now, in markets, because we have already seen on an intraday price that prices probably put in a trend move or an overextended move before that double top bottom pattern, well, we have a higher probability of anticipating it'll shoot out in the direction of the reversal for us. And as I said, we'll look at that on a couple of charts to get an idea of what that actually looks like for price action. But as I said, if you're a sports fan and if you understand rugby and you're still learning about trading, well, think of that. When price on an intraday basis pushes out, it's like a rugby scrum, and we are expecting price to, the rugby ball to get pinged back in the direction of the range. All right. Remember what I said. 80% of the time on an intraday basis, markets are range bound. So we're gonna let that number play out for us. And if you want a much simpler, easier reminder of tops and bottoms, well, if you open your left palm, you will probably see the creases in your hands, okay? And if you just squeeze your hand a little bit closer, what you will actually see there is you will see a constant reminder of a double top or an M pattern. So if you ever need to be reminded of what you are, what type of trader you are, well, I certainly can do, is that, remember I'm a double top or an M pattern trader. It's there in your hand. Everybody can have it. It's almost like a constant reminder there of what you should be looking for on an intraday basis. So, even if we like double tops and double bottoms, the key word here is confluence, all right? Because lots of people will trade double tops and bottoms, but some patterns and signals are much better when they're in combination, and that is what provides a higher probability setup, okay? So you do want to understand what is the price action showing you and the actual pattern itself in terms of the double top, double bottom, an M pattern or a W pattern, as you can sort of see on the slide there. Also, the location, right? This is where we see, did it happen at the previous day or the previous week's high or lows? Or maybe it happened at a big round number, like, as I said, like 2000 in gold, etc. It can also be an instance of the timing, okay, in terms of, has price, certainly in the FX market, has it broken out of the overnight Asian range. Has it broken out far enough that, when it provides this pattern, is that give us an opportunity, or did the price need to move a little bit further out, okay, to sort of, to before it provided the opportunity to sort of revert to the mean? You can also add other indicators like the ATR, the average true range, okay, if you need it. But for the moment, for most new traders, being able to just understand the context, the environment, and the pattern, and the confluence of that along with the location, that itself is enough to basically for new traders to take on board in terms of how to look and work. And then what we're also looking for is, is understanding the kind of the best times for this to occur. So, what we have here is there's a forex market time chart. So, primarily, I'm here based in the UK. So, invariably, what I like to sort of see is normally kind of in the morning, sort of trading that kind of session there. All right, just basically over the early morning London session. And invariably, what we see as well, US dollar trades well whenever it wants to, because it's the main player in FX markets. But equally, it sort of suits my sterling focus. But also, you can see euro and Swiss C, okay, operate well in that kind of European session. And you also have the sort of the last left legs of the kind of Japanese yen from the Asian session as well. But of course, I also recognise that there'll be some people sort of trading there in the US session. Personally, when I look to trade sort of double tops and bottoms of previous days' highs and lows, I tend to find they work better for me in the European session. Other people may differ. Other people may have traded them in the American session or the Asian session. That's absolutely fine. Each their own. But from my own personal experience, that's when it's tended to work best for myself. But I wanted to show that it can happen. Okay, it's not purely just happening on the European time. So this is what for me would be kind of overnight Asian session. This is the Kiwi against the US dollar. It's the 5-minute chart, and hopefully what you can probably see, just on my normal charts, the standard chart chart setup you normally see me, blue 20, red 50, green 200. And the fractals. But what I also have here is a plug-in on an intraday basis. This blue line is printed as the previous week's high, and this blue line was yesterday's high here. And what we can see what happened overnight is price rallied up, and then what did it do at that kind of level? Put us a double top before price fell all the way back down to the 200 period moving average. Remember what I was saying is like looking at it like a rugby scrum. Okay, let's get it clear up and draw it. Is that in a rugby scrum, they're normally fighting each out, and you're trying to work out which who's going to control the ball, because we know that 80% of the time markets are range bound. We know that when price trends up, okay, and trends up into these levels of resistance, there is a higher probability that basically the price will move back into it. So once we see the scrum going on here, this is the bulls and the bears, the buyers and the sellers fighting out, okay, for control. When we see it start to show itself, then that invariably that's giving us the heads up of the way we want to look at moving here, the way we want to actually sort of be ready to trade in that particular direction. Now that doesn't happen 100% of the time. It could basically do that and then basically go on, but more often than not, remember what I said, 80% of the time on an intraday basis, markets are range bound. So if we've pushed out, we're expecting a reversion to the mean back into the range, and that is the trade that I'm particularly looking to take a piece of. So as I said, that was one on the Kiwi dollar 5-minute charts on a overnight. Well, overnight for me, but in the middle of the Asian session. So I particularly prefer to trade them in the European session because at that time of the day I'm firmly tucked up in my bed asleep. But I wanted to show that they happen. They happen all over. It's not just a particular to the European element. And so this one is pound against Swiss franc on a 5-minute chart, and I put this in actually because it's scruffy, it's messy. Everybody likes to see picture perfect setups. We all love that, but the reality is that that's not always the case of the way it works. In this particular example, this is the overnight, this is the Asian session, and actually price pushes out initially out of it there, okay, and puts in a double bottom there before price rallies up. Where does the rally up get capped? Well, it gets capped at the previous day's high, okay, it gets capped at the previous day's high, and puts it in a messy double top. As you say, a messy double top running into the American session before it continues down. So, as I said, I wanted to put in a bit of a scrappy example, because that's what all traders will have to deal with. But if you understand, okay, if you understand the dealer's motto, you take that on board. If you also understand, looking at and interested in recognizing where previous days highs and lows are, well, then we get to see that confluence of indicators and the confluence of events coming together, 2, 3, 4 things coming together at one time and place. That is our trade setup. So before we switch across to the live charts, I always like to give you a little bit of homework, something you can take away and start to utilize. So your task from today's session is go away and open any of your charts on an intraday timescale. It might be 5 minutes, 15 minutes, 30 minutes. And if you don't already have a plug-in or find it, well, then just draw forward lines, okay? Just draw forward horizontal lines from the previous day's highs and lows. Also, just draw on any significant big round numbers you see. And then look at what happens when price reaches those levels. Did it power on through because it's a breakout and it's heading into in a new direction with new strength, or did price reverse? Okay, there, and did it reverse and revert back into the range? And if it did reverse, were there any significant price action signals to help alert you to a possible trade opportunity? Things like pin bar rejection candle, an engulfing candle, a key reversal, star formation, or a double top and bottom. So just take that away. Just you could go away and open any chart, or even just pick the charts of your favorite trading instruments and just go through and have a little look and see how that actually particularly played out. So, because of course you can listen to me talk about it, but it's actually you going away and doing the work, all right, and actually getting stuck in. That's what will make the difference. So just to conclude before we go into the charts, all right, thank you for joining us for these Monday Market Matters webinars. All right, we said right at the start of the year it's going to be an interesting year in markets, and I'd like to think that we have lived that out. It certainly has been. But remember, if we're going to use highs and lows, the important thing is we want to be able to think like a dealer, think like a market maker. Just take a moment to understand how they look to operate. Always be aware of the impending news announcements because they may help you. Remember those kind of dealers' mottos. 80% of the time, intraday FX markets are practically range bound. So we want to do is to learn how to trade reversal, or more importantly, mean reversion setups for when price moves out of its range, and how to see how does price, once it's moved out of its range, how does it react around the previous days and weeks highs and lows. And if it is there, well, you can look for a reversal pattern, a reversal setup. But you could also look at things like double tops and bottoms, okay? They can be very useful there if you're looking for specific setups at that particular level. Okay, so let's go and have a little look at them on live markets. Before we do, just a reminder that we'll be back Monday Market Matters next Monday, 27th of November. And what we're going to focus on next session is how to make the most of a false breakout, which kind of feeds in a little bit to what we talked about today. There are elements of combinations there. Those of you who know me know I love a confluence of events, okay? But that's what we'll be talking about, how to make the most of a false breakout. So if you haven't registered there, take a little picture of the QR code there on your mobile phone, okay, and just basically make sure you sign up, because there'll be lots of interesting stuff we can take away and will help add to some of the sessions that we've covered here recently. As always, if you've got any questions, you can get in touch with us, okay? Or if you've got questions about your account, please get in touch with the account representative. You can call them on the English desk on the London number 0207 6500 567, or email englishdesk@activtrades.com. So just bear with me a moment. What we'll do is we'll switch across to the live chart. So just please bear with us a moment. Okay, so here we go. I hope that you can still hear me, and I hope that you can see the charts on the ActivTrades platform, one of ActivTrades platforms here. And what we're going to look at here, this is my pound profile. Okay, so here we go. I've got pound against US dollar, euro against sterling, pound against Aussie, pound against Canadian dollar, pound against yen, pound against Swiss franc, pound against New Zealand dollar, and the FTSE there as well. So we've had a few interesting moves on sterling this morning. Not always as pretty as we would like, but hey, this is a 15-minute on the chart. Let's just bang. Okay, so let's bring up the old drawing tool here. So as I said, pound against US dollar on the 15-minute chart. This was Friday. Okay, and the Friday session, that's the overnight Asian session, and then price basically dropped down. And where did it drop to? Okay, this line is the previous day's low, and we put in a scruffy double bottom there. Not the most pretty one, but it doesn't have to be pretty. Okay, but what we're looking for is, did it sort of it pushed out, did it revert again? Did it revert to the mean back into the middle of the range? And it most certainly did. And in that case, gave us, a very, not the prettiest, but, a valid double bottom there, okay, which is a tradable pattern. Today, if we look at it, well, actually, what we've seen is, what's been interesting is that, that was the overnight Asian session. We come into the Monday session, and actually, what's happened is we popped all the way up here, okay. Where did it go to? The previous week's high, and then it came all the way back down off it. And unfortunately, didn't really give us didn't give the kind of trade setup that I particularly like. Okay, lots of people might have traded it in a different particular way. Okay, that's just, but yeah, even on the 5-minute chart, that was a twin tower tweezers setup there. Okay, that is basically what we saw there with that going on and stuff. Yeah, even on the 1-minute chart, that is the way that worked. But on the kind of hourly chart, even the hourly chart was just a tweezers there. Okay, that's it. But the interesting is that where did it turn around? It turned around at the previous week's high, and that's the kind of what we want to look at. We want to basically be able to be interested in. If we look at things like pound against Swiss franc on the 15-minute chart this morning, it's kind of a tale of two moves in the sense of early doors. Okay, this was the overnight Asian session. We popped up here, okay, and this was yesterday's high, Friday's high. And actually, what happened is we reversed off it. Okay, and then we came down to the kind of overnight low, the previous session low, and then what did we put in here? We put in a double bottom there before price rallied its way back up. Where did it rally its way up to? It rallied its way up to yesterday's high. So Mondays can be, and sometimes they can be a fabulous day. Sometimes they can be a challenging day. It really depending upon how the price action plays out. So you have to just, as always, make sure that you're managing risk and on top of your risk management as always. But if I just look at that, the trade this morning was. So if you go into the lower time frames, here is what I was looking at this morning trading, is that that same pound against Swiss. Well, actually, here we are at yesterday's high. Price popped up. And once again, it put in a double top. It might not necessarily have been the most pretty or the most perfect, but those of you who've traded long enough to know what you want and what you get can be very different. But you can see it worked its way down there until it then, as I said, put in a double bottom there and worked its way off. Okay, so as I said, these patterns, they do repeat, okay? And even if the way you trade, looking at the previous day's highs and lows can be enormously helpful as a way and a means of understanding how those trades can operate, okay? And even, if I look at Friday's session, Friday's session there, okay, and pound against Swiss, we came in here and once again, this was Friday's session, overnight, came down, hit what would have been the Thursday's low, and then we put in what wasn't pretty, but it's a double bottom that traded its way back up into the range. Okay, and that's what we're looking for as an intraday trader, how to use highs and lows. That's what we are particularly interested in. I think pound against Canadian dollar was interesting this morning in the sense that, let's zoom out here, is that what we saw here was not perfect setup, because what we had was the overnight Asian session. The price bounced its way out. What happened? Where did it go to? Well, it went to the previous week's high, okay, and then a bit like the pound against dollar, it just literally turned around there, tweezers there, before price fell down. But where did it fall down to? It fell down to what was Friday's, the previous day's high, which had acted as support earlier, acted also as support here, okay, before prices rallied its way up there on that, okay. So as I said, understanding these previous week's highs and lows and previous days' highs and lows and being able to see them on your charts, they are great levels at which we can start to look at doing repeatable business. That's what we're really looking for. Are the places where we can do particular repeatable businesses that can do. And this is an interesting example on pound against yen, namely that what I was interested in this morning was that we had the overnight Asian session. Price had fallen down to what was these lines was previous week's lows, yesterday's lows, and I actually thought we had a nice 30-minute rejection candle there, nice pin bar there, and I was waiting for price to sort of follow its way through and work its way up. But it didn't. All right, it didn't follow through on that. It actually had to go down a little bit further, and then what it did is it printed that morning star formation. You can see for the afternoon session so far that has been working its way back up there. So, it did. It's just a sign that nothing works perfectly, but it's having the patience to understand and wait for the right setup. Okay, and sometimes realize that price sometimes just needs to go a little bit further. Price needs to be manipulated a little bit further, right, before it actually makes its reversal and its move there. So there you go. I'm hoping that just gives you a little bit of insight there, okay, into previous days' highs and lows, previous weeks' highs and lows, how they can be useful for you on an intraday trading market, okay, how they can basically make use of them. Let's have a little bit of a quick look before we finish up today at the US indices, okay. As we've opened the US markets, how are they looking? How are they doing? Remember, historically, this week is one of the most bullish weeks of the year. We have the American Thanksgiving at the end of the year. The Americans, and they're very they're very bullish people anyway, generally, and stuff. And so you've got their main annual American bank holiday there, okay. So invariably, it's no surprise to see that sometimes we are bullish here with the way we operate. So I'm looking at here, this is, let's get my drawing tool. This is I have a profile here of indices. So I've got the Dow, I've got the NASDAQ, I've got the S&P 500 and the Russell, okay? And there's others I can bring up, but those are the 4 major US indices I'm interested in. And certainly on an intraday basis, I can like to see how these particularly operate. And once again, I am curious to see how do they operate based on previous days' highs and lows. So I'll be looking at that on the sort of on the Dow. You can see we're actually quite a little bit away from it. If I look at the NASDAQ, even though we've been on a great trend, I'll be looking at, okay, we've already that was a pretty strong opening into the NASDAQ, okay. Bosch have actually gone through and then actually came back and flipped it. So I would be looking at, have a look at that. It's gone through there. So as I said, that it does not always, they don't always reverse there, but when it's got a strong session through like that, well, that's absolutely fine. We'll just have a look at S&P 500. S&P 500 is getting up towards the yesterday's high, Friday's high, sorry, and the previous week's high. And so what we might do is get up and see how does price react there, and that would be what I'll be looking for, to see how does price respond once it's there, okay. At the moment, it's just kind of going a little bit sideways, taking a little bit of breather after the opening. Look at the short time frame there, 1 minute. But yeah, that would be my view, is just watch, see how does it, when it gets up here, how does it react here? Previous week's high, Friday's high, see how does it work. That's what I'd be focusing on at the moment. The Russell, I don't personally trade a great deal myself, okay. It's not, I just use it as a bellwether, because what I like to see all of the indices operating together, in terms of I like to see the good strong correlation between those indices. Certainly it's been a very bullish start to the session, And then you're looking at, well, okay, where are the previous highs and lows that might provide some opportunity? Brendan says, thanks, Paul. Got to run. Yes, approaching yesterday's high and 3-day high. Yeah, absolutely right, Brendan. Okay, so there you go. Yeah, absolutely right and stuff. So, yep, good luck with that. You know, it is yesterday's high, okay, and previous week's high, right? Okay, so yeah, have a look. Good luck with your trading there, Brendan. Okay, I hope it gives you a good start to the week. So, but there you go. So even though we're looking at very strong moves on the American indices, I would still be looking at where the previous days and previous weeks highs and lows. When the S&P's coming up to it, that could be a nice place. You can see on the Nasdaq there. The Nasdaq, even if I go down the charts, see in the 5-minute chart, it just blew through it. Okay, that's telling me that once it blows through it, well, that it still wants to go, and you can see for yourself it pushed, comes back a little bit, and then carries on. Okay, that's no surprise when you're seeing it completely break away, and that's why I don't have orders in to fade previous days highs and lows. I like to see how the market reacts, how the price action plays out, and from that means that I'll trade off that, and I'm happy with that as my way and means. Okay, so what I might do is just keep the S&P on there, okay, just to watch and see how that reacts. Okay, that might be the start of my American afternoon session trading week. Okay, there we go. So it's launching itself into there, so that'll be a good place to be able to watch it and see how that plays out for you. So be sure to keep an eye on that. Super. Okay, so we'll watch on that. Let's have a little. We've got a minute or so. Let's just have a little look at how gold has played out on there. Remember, we were saying, okay, weekly chart. Okay, the weekly chart of gold. Gosh, I was talking about how we do want previous highs and lows, but also big round numbers. Those of you who've joined us for the last few weeks, we talked about this year about 2,000 being a big number and how prices come up to it and then rejected it. And we fell away from it, but then last week we've started to move back up into it. Okay, that's what we're seeing, and let's have a little look at on the shorter time frames. So yeah, so we can see that bang, here we go. I'll just take these off here, control this on for the moment. For the kind of, this would have been, what's this? I think it's probably Tuesday, is that the price pushed up into here, okay, which was above the previous day's high. The price action there is not, excuse me, none of that is terribly bullish. None of that's really terribly strong bullish. And before price rolled over and fell all its way up there. But the next day it sliced completely through it. And as I said, if it sliced completely through it, that's okay. All right. If it's sliced through it, I'd sooner that, because there's no ambiguity there. All right. There's no ambiguity. But what we saw was the next day we came up to it, and we came back down to it, and it didn't turn as what happened here was, let's just clear this out. This is one of my trades last week, is that what we had was basically a double top there before price ran down into its works there. Okay, so not surprisingly, that what we will see is that I think we'll see that confluence of events of price pushing its way up to 2,000. I think that's where it will head. That's where it will head its way. There we go. Just draw it up. That's where I think we will maybe have a little move down, but I can't help but think 2,000 will be the level, and that will be a level where we'll look at for price action. There's a double top there, okay, double top there that showed up before it rolled over, and it wouldn't surprise me if there was another one when we push our way up there now. Okay, ladies and gentlemen, so time flies when you're having fun, and we've run out of time for that session. I hope that you found that useful. I hope that's giving you a little bit of insight into how highs and lows are formed and why they're important, and how you could actually possibly trade them. As I said, just pick up on the homework, take it away, go and work on it for the rest of the week. I wish you all a fabulous trading week for those of you who are in. Just remember that, as I said, Friday, if you're at the IX Investors Trader Show, come and have a look. Speak to Vikesh, myself, and the rest of the team on the ActivTrades stand. And next Monday Market Matters, we'll be looking at trading false breakouts, and I hope you'll join us for them. Until such time, I will bid you a very great trading week. Speak well, everybody. Cheers.